What's up, guys? Pitmeister78 here. I'm just wanting to record another video. Hopefully I'm using this computer that I record these videos off of is a MacBook Pro. I know it looks like Windows down here. Just a quick reminder, I know a lot of people, they don't make MetaTrader 4 for Macs. So a lot of people get Parallels or VirtualBox or any of those ones. I used to have VirtualBox on this Mac until last night when my hard drive crashed. But actually I found if you have a desktop at home, Apple makes this remote desktop connection that's right on your Mac there. If you can see it, you can just see the words. But I just log in from my laptop to my home computer, and this is so I have Windows downstairs, and this is my Windows PC downstairs, and obviously you can kind of see my background and all that stuff. And I'm actually doing this on my Mac, so you don't actually have to have Parallels or VirtualBox if you don't need Windows stuff. If you have access, you can just remotely connect to your PC at home and do it that way. But anyway, yeah, doing this scanning and stuff with with your finger, it's like almost impossible. It doesn't allow. And the same thing here, kind of. See, maybe if I do it like this, it'll just stop. But it's very hard with the little trackpad, so I'm using this little mouse. But anyway, what I wanted to do here is I wanted to just kind of demonstrate, the risk. Something that I was talking about was, risk reward. I was finding that in my trading, that my trades were working. More often my trades were positive than negative. However, with me always risking $30, losing $30 all the time, and only going for targets, of like 30 pips or 50 pips, right up here, it was only giving me, $10 profit maybe, which a profit is a profit. But again, if you lose one trade for $30 and you win a trade for 10, you're still negative. If you win 3 trades for 10, you're just barely even. So a 3-to-1 ratio of wins to losses is still, you're at 0. So that's why I'm trying to decrease my risk will allow me to increase my lot size. The only thing that you have to keep in mind when you're trading dailies, you really have to give the candles move to run, or room to run, because they almost always pull back. I mean, look at the majority of these candles. There's always pullbacks. Here's you got a close here, a little pullback. This is a candle I was going to demonstrate here. If you see, so I said if I wanted to trade one lot, that's going to be 30 pips that's my max, because again, 3% of the account size. So, but with these pullbacks, so I said I like to keep my lot size, from 0.4 higher. 0.5 is basically 50 cents a pip. So I can handle that. If I get a 60 pip profit, that's $30. That's cool. Of course, 60 pip loss is another $30. But again, the reward would be kind of the same, so that would work out. But in this case, let's say that we took this trade based upon our system here. Let's take a look at it. So we see that it crosses right there. Stupid. Oh, I guess the mouse doesn't make it any better. I was hoping that it would, but it's not. Okay. So we see this candle. Now, based upon our strategy, we wouldn't be taking this because it didn't close good enough, and the stochastic is not pointing up. So this would be one where we see it down at the oversold level, but we would be cautious. We would that's our little blinking yellow light saying hello. Prepare. There could be something happening. There might be something happening here. So what we do is we wait for the next bar, which is right here. Obviously that's a nice strong up bar. But let's just say we got in here because I wanted to do the risk reward thing. So you can see if we would have said, all right, we're going to take this trade. We're just going to wing it and we're going to take it. If you see, it pulled back 37 pips before it eventually went up, 80, 92 pips around, 90 pips. So if we would have said 60, which our stop loss would have been about this bar low right here, just above the bar low, we could have done a 0.5 lot size. Our target would have been up here, which is about 82. So I probably would have done a little bit below that, so we'll just say 80. We would have been successful. That would have been 40 bucks right there. And we would have only been risking 30. See, that's a good risk-reward ratio. I would have aimed for here. So we would have won that. But, based on our system, we wouldn't have gotten in. I just wanted to demonstrate the pullback here. So let's see what happened. If we would have entered this market, we have our stochastic pointing up. A lot of people like to wait until it crosses this line. This is considered the neutral line. It's kind of considered like, hey, nothing's really, it could still be down until it crosses up here. But I like crosses. I like to try and catch trends when they first start. Very hard to do, but that's just me. So let's see if we would have entered. Would this trade work out? Oh, it would have. Okay, so, but in this case, what would we have done? We would have entered, whoops, oh, maybe I could just do that. Okay, sorry about that. So we would have entered here. Now, we did have a little bit of a pullback, and that was what? Not bad, about 20 pips. Again, we would have risked the maximum. Remember I said ATR or bar low, whatever's lowest. So 82, so we would have done probably about 82. Now our target on this one would have probably been around here, a little bit below here. So I probably, since the resistance is here, I'd probably be going for this bar right here, so 105. So when would we have hit that? Right here. But let's see what calculation that would have been. What was our stop loss? Was bar low 80, we say 87. So we bring out our little calculator here, and let's say 20 divided by 87. Okay, see, so right here, this is what I'm talking about. Look at this little 0.22 lots. So what I would have done when I saw that calculation, I would have said, nope, I'm going to risk 60 pips on it. So I would have put my stop right about here, 60 pips. So then let's see what that would have done now. Oh, I'm sorry, I did the wrong calculation. Let me do that again. It was 30 divided by 80, not 20. So let's see what that would be. So 0.34, close. I probably would have said, I'll round it up to 0.4 and decrease the pips. I probably would have said 70 on that one. So let's do that. Okay, that would have been good right there. So I would have said, all right, 70, we'll split the difference. So we put it at 0.42. So 70 pips would be right here. Right about there. And then 0.42 would have given us, let's see, we were going to get out at what, 105? So let's do, see, so we would have made $44 right there. That would have been a good move. We only risked 30 to get 44. So that, so that's what we do. Now to find out the risk reward, we divide this, the potential profit, divided by the potential loss. And it's 1.47. So 1.5, the risk reward ratio is 1 to less than 1. Basically it's supposed to be 2 to 1 or better. So if this was 2, we'd have a 2 to 1, but it's 1.47 to 1 is our risk reward. So it's higher. It's higher than break even. So that's still better than what we were doing. So that's what we need to do there. So I just wanted to kind of show that. Let's see if we can find another example here that might work in this case. Okay, this one would probably work. Let's see where the stochastics and everything lined up. So we see we have a market that's near an extreme low. Next day we get a cross, we get a stochastic cross, we get in. Okay, so what would we have done here? Let's see how far this is. So the bar low is again 75. So another one of those. And I probably would do, let's see, bar low. And again, when it's near these resistance points, sometimes you get tempted. You're like, you know, I just want to put it right here. Luckily, in this case, it didn't happen. But let's say we did it at the bar low, which was 73. So we bring out our calculator, and we say 30 divided by 73.41. So now we get into that. And then our target in this one, since it's a start, you know, this is where the targeting gets hard, because, you know, this hasn't happened, so we need to try and find out a target from this point. If I would have seen this, you know, I would have seen some resistance right there. I probably would have shot for somewhere in the middle of these bar lows, bar high. Yeah, that's a resistance, 84. So I probably would have gone for about 70. Let's say if I saw the resistance at 82, back off 10 pips, 72. So let's see. We'll just do this real quick, times 72, $30. So we're $29.58. So divide that by 30, and we're almost at a 1-to-1 risk-reward ratio. We're basically at a 0.98 to 1 risk-reward ratio, almost break even. So it takes a little time. We're gonna have to develop this thing and see how we can make it, you know, tweak. We could have just said 60. Could have just, you know, instead of trying to do the bar low, you know, sometimes if it's too much, we could just say, hey, 60. That's it. 60 is $30, and we want to trade half a mini lot. So we're just going to set it right here. Obviously, in this case, it would have worked out. And if you would have let your profits run, you might have made it. If you put a trailing stop on, you probably would have made it up to here somewhere. And then when this thing came down, you probably would have gotten taken out. Let's see, 142. Put a trailing stop at 30, so you probably would have gotten taken out down here. So, you know, about 100 pips if you would have hit your target first. You know, the 80, take it off the table. Now that's another thing you got to do. Are you going to keep it on the table, or are you going to keep it off? You're going to sell half or take it all off. I like to take it all off, just because, you know, lock in those profits until you build your account. So that's it. I appreciate you guys watching. Any questions, you know, shoot me an email or something. Again, sorry about the choppy chart here, but it's really hard on this laptop with the mouse and all that stuff. So thanks for watching, guys. Take care.